It is wild that on a Wednesday night in New York City with good weather, we have this many people at an event called Tax Prep and Chill. I just have to say that that's special. It shows that you are obsessed about your business, about learning, and I don't think normal is the goal if you're an entrepreneur. You're trying to level up. So normal to me is a dishwasher setting. I think it's absolutely incredible that we're here for Tax Prep and Chill tonight. Now, we have a very special agenda today. We're going to start off with, hopefully everyone's had a chance to enjoy some food and some drinks. We have a presentation on taxes tonight. The goal is to have everyone here level up their business, walk away with value. But we've heard this loud and clear. Meeting other entrepreneurs is so critical to actually leveling up your personal mindset, but also your business mindset. So we have a special game, Business in a Box Bingo, which we'll be doing so that we can all get to know each other. We also have special prizes. You might have seen when you signed up, but stay tuned till the end. We have some very, very special prizes. Now today, two speakers. I will be leading a session on Tax Prep and Chill, and I'm also very excited to have Julia Kim from the Shopify team here do a deep dive on sales tax. And I know there's tons of questions on sales tax. We got a lot of questions before. We're going to demystify that today. Now, before we fully dive in, I want to go through exactly what we're going to cover today. We're going to run through, we'll summarize things. I want to let everyone know that you can take notes, but we will be doing a recording, so you can access this after. You guys can stay fully present, focused on the presentation, and I want to make this engaging too. If you have questions, we'll take Q&A, and at the end too, we can chat one-on-one and we can learn from each other. So with that, we're going to start off with step-by-step business structure guidance. Step one, part of the agenda, will be business structure guidance. So whether you have, actually, let me ask, can you please raise your hand here if you have a U.S. business? That could be an LLC or a C corporation. Okay, now can you please raise your hand if you don't have a US LLC or C corporation? Okay, I will be finding each of you after. You're also going to get a free business, so you came to the right place. We'll start off with business structure guidance, how to properly set up your entity. Next up, we'll go through how you can optimize your tax savings and tax potential with your business. We'll then run through tax deadlines so you can stay prepared, know when the deadlines are, not be stressed. We then have Q&A. Julia is going to help answer questions on sales tax. We have prepared some Q&A covered by a certified professional accountant on the Doola team, and then we'll wrap up with some business in a box, bingo, and rewards. So with that, let's dive into today's presentation. And before I can actually get into Doola, the truth is there was a ton of people and work behind the scenes that led to this moment today. And I need to tell you a bit about myself to actually tell the story of how Doola got here today. My name is Arjun Mahadevan. I have to give credit to a ton of people, first starting with my parents, who are actually from India originally. They used to practice medicine in England. And then when I was 6 years old, they actually immigrated from England to Boston. Now, believe it or not, I actually was born in London. I used to speak a little Welsh. I lost the British accent. I then moved to Boston when I was 6. I didn't get the Boston accent. You win some, you lose some. But I grew up in Boston, and I now ask my parents, hey, why did you decide to move? All I remembered was the cartoons changed. They went from Clifford the Big Red Dog to maybe SpongeBob. The people talked a little different. But I asked my parents, and they said the reason why they did, as cheesy as it sounds, is the American dream, or this upside you can have in America, this cultural pot of diversity, the upward mobility, and the idea that actually anyone here can start a business or go after what they want with enough hard work and strategy and knowledge, of course. So I grew up in Boston. I went to school at the University of Pennsylvania and the Wharton School of Business, where I studied mathematics and statistics. I was always a numbers guy. And the truth is, when I was 6 years old, I had this dream of helping people start LLCs. That's a lie. I really hope no one believed that. The truth is, I didn't know what an LLC was 4 years ago. I'd be lying if I said when I was 6 years old I knew. But here we are today. I'm so obsessed with LLCs. My name online is Mr. LLC. I'm trying to grow into that. I'm that obsessed. And I'm all about spreading the mission of Doola and what we do. I'm climbing Cringe Mountain. There's all these naysayers saying maybe that's a bad idea, but as we keep climbing with other entrepreneurs, the land of cool is on the other side, I promise. Now, a lot of people ask me, do you have hobbies? I'll be real with you guys. I don't really. I'm very obsessed with Doola. The only hobby I have outside of Doola is I'm very competitive. I set a fitness goal every year. So last year, I competed in my first bodybuilding show. This year, I'm trying to summit Mount Everest in one day on the stair stepper. I climb the Eiffel Tower every morning. I'm working my way up. But really, I'm obsessed with Doola, and here's the thing. I don't think that anyone should be sorry for being obsessed with your business. If anything, if you found something that you're obsessed with, most people never find that. It's actually a blessing. And I'm going to guess most people here are obsessed with building something and putting something out there. I'm so obsessed that I will go on any podcast I can to share the word of Doola. I really will. We even started our own podcast so that we could interview entrepreneurs and have them share tips on how to level up their business. But the truth is, it didn't come easy or start this way. I'm going to give you a flash rewind on how we got here. This was business number 1 5 years ago. I thought, hey, I want to work out with friends. Let's start an app like ClassPass and Instagram so I could text you and say, hey, let's go on a run together. Terrible idea, because you could just text your friend, and turns out people like to post pictures on Instagram where you can get likes. Business flopped. Next business, and I'm embarrassed, this is cringe to show this. I thought this could be a business. That's how bad it was. I thought that I could come up with these tweet bombs. I played fantasy football. What if I could pretend to be Adam Schefter, and every time someone made a trade, I could make tweets? I don't even think the website got a visit here. Maybe my mom visited it, more on my mom later. But second business, absolute flop. Third business, okay, we're on to something here. People have lists of their favorite things. What's your favorite pizza in New York? Joe's Pizza is the only right answer. What is your favorite fruit? Mango. Whatever it is, let's create lists of your favorite things. Turns out people like to post lists on Twitter. It's not really a problem solving something. We actually got an interview with Y Combinator. They said it was a bad idea too. Fourth idea. Okay, now we're getting closer. COVID had just hit. The world was going remote. What if you could send a video to communicate with someone 12 hours ahead in Asia versus hopping on a Zoom call while someone's sleeping at 3 a.m.? What if you could bring Instagram stories to work? Okay, Y Combinator liked the idea. Y Combinator liked it so much, we actually got into Y Combinator, which has an acceptance rate lower than all the Ivy League schools. But this business also flopped because it turns out, shocker, people do not like recording themselves on video. They really don't. And the world was actually craving real-time communication. They didn't want asynchronous. It sounds cool, bad idea in practice. It's kind of like everyone has a pet, or a lot of people have pets, and billions of people use Facebook. What if we built Facebook for pets? It's a sitcom idea. It's a bad idea. It doesn't need to exist in the world. That was what we built here. And it was at this time when it was hardest, because I would bet everyone in this room has felt this, that feeling of, am I cut out for this? Maybe everyone was right that I shouldn't have started this thing or shouldn't do it. Maybe I should go back to what I was doing before. All those people were right. And the worst part here is I said I would come back to my mom. During this time, my mom was my worst enemy, because every time I would see her, she would say, maybe you should go back to school and get an MBA. Maybe you shouldn't have started this thing. And my mom's trying to support me, but I remember thinking, Mom, this is not helping me whatsoever. So it was at this moment when the light bulb kind of hit, saying, I had no clue what was coming next, but I was not going to give up because I felt like I could actually do it. And then I realized the one thing I knew we had to do was pay $30,000 in legal fees to set up our business and run it, because that's what we did the first time as this international team setting up a US business. And you might be thinking, how could you pay $30,000? You're right, it was dumb. But when lawyers charge $1,000 by the hour for emails, and you have a bookkeeper here, an accountant here, and you forget to file your sales tax, next thing you know, you're paying a lot in fees. And that was when the light bulb hit. What if you could create this Staples easy button for not just starting an e-commerce business, but scaling it too? And what if instead of cobbling together solutions, you could connect the dots? And that is how Doola came to be today, this business in a box for e-commerce that helps you start your e-commerce brand and scale it. Bookkeeping, business tax filings, e-commerce analytics, all the unsexy yet critical required work needed to scale a business. Because I know every person here didn't just start a business to get one sale. You're here to scale too. It could be 5 figures, which is completely okay. It could be 6, or it could be 9 figures, whatever it is. You want to scale this thing as well. And our entire team at Doola is driven by this one mission, this one duty. I've seen it so loud and clear. I've seen it with my family, and I've seen it with entrepreneurs. Talent is everywhere, but opportunity is not. And our goal is, if we can make it click button easy to start and scale a business, we single-handedly increase entrepreneurship globally. I believe it's a way you can leave a dent in the universe, actually not float through life and have an impact. That's the power of a company. So we're driven by that mission. We say it every week. We say we want to reach 1 billion entrepreneurs. That's the goal. And we are so grateful for thousands of customers globally who've trusted us from over 6 continents. Quick tangent here. If anyone knows anyone from Antarctica, we have never worked with a founder from Antarctica. You get 10 free LLCs if you can introduce us to that person. So that's a quick side note there. But over 175 countries, we've seen talent is everywhere, but opportunity is not. I am so grateful for the investors who have backed and trusted Doola too. And let me just say this right now too. If only it was as easy as raising money and your business works, Y Combinator was wrong the first time. They picked an idea that didn't work, that video messaging app. If only. So I've learned the hard way, money doesn't equal your business working. It can help, and we're blessed to have great investors, but it doesn't mean you need money to succeed. We are so grateful for all of our partners, some of the top partners, creators, courses, and communities within e-commerce, and we are blessed to work with companies like Shopify, like Amazon, to help increase entrepreneurship globally. This wouldn't be possible without customers, and that is where we come to today. So now my goal here is I want to provide, in the next 15 to 30 minutes, so much value. That's the goal here. There's not going to be much fluff. Again, you don't have to take notes. You'll have a recording. But I genuinely want everyone here to walk away with actual learnings that they can implement into their business. So let's start. Disclaimer number 1. I joke in my next life I can be an international CPA, but I'm not a CPA. So disclaimer right here is that this is not official tax legal advice. That being said, everything here has been vetted with a certified professional accountant on the Doola team. I have to give the disclaimer one more time. This is not official advice, but it's all vetted. Again, you can chat with a CPA. We have consultation links, which we're happy to share after. So let's start from zero. Why start a business? Many people here have started before. The reasons to start a business, especially in the US, the biggest thing is, hey, a business isn't a business until you get paid. It's an idea, it's a napkin, it's a deck. The first sale is the goal for any business. So to get your first sale, let's work backwards. First sale means I need a payment processor or Shopify payments. To get that, I might need an entity. To get an entity or a bank account, I need an EIN. To get an EIN, I need an LLC. I also might want liability protection. No one here wants to get sued if you're selling a product or maybe a supplement and someone sues you, if someone slips in your office. These things all sound crazy, but you want to protect against those. So the L in limited liability company, liability, that's the key with an LLC. For non-US founders, if there's anyone here visiting from outside the US, there's also the social proof of saying, hey, I'm not just a freelancer, I'm a business. You see what I did there? I did nothing. I just said I'm not a freelancer, I'm a business. And that has a huge impact. No one has to know it's just you behind the scenes, but their perception of you has changed overnight. That credibility matters for your customers, and it matters for you. The other thing too is, look, the US market is the sexiest, largest consumer market in the world. We actually have some investors in India who say they actually recommend to Indian founders, if you can sell in the US and sell $1, you can sell any currency outside the world too. So the dollar is a strong currency, huge market here. That's a big reason why people want US companies. Crash course time, let's run through business registration. Again, if you have a business, this is a refresher. If you don't, I want to add value here. So in terms of business structure, I'll boil this down very simply. A lawyer typically tells you 11 things you shouldn't do. I'll tell you the one thing you should do. If you do not form a business, you're a sole proprietor. That's the default classification in the US. Let's start from the top. Now you can ignore the column on the right, that's for non-US residents, but let's go through that middle column. Default is sole proprietorship. You have no liability protection there. That's the default structure. The next level, and I would recommend to start an LLC if you're actually serious about scaling it. Technically, you don't need to form an LLC to start a business, but having the LLC gives you the liability protection. It opens up things like business banking, potentially business credit as well. If there are two of you with the LLC, you're a multiple member LLC. It's as simple as that. Now, there's this thing called an S corporation. Let me clarify. An S corp is not an entity. It's a tax election or classification. So you can do that on your LLC. We'll actually explain what the S corp is. And then the final type of entity is a C corporation. Now, I'll actually just answer this right here. Should you do an LLC or a C corp? If you're raising venture capital from US investors, a C corp is going to be the way to go. That is required by US investors. It's really as simple as that. There can be edge cases, but I want to actually give you an answer that makes sense. If you are not raising venture capital, an LLC is the way to go. Way easier to maintain, cheaper to maintain. It has tax flexibility as well. And you get many of the benefits of the C corporation, right? You can get things like access to business banking, business credit as well, and multiple members. Now, in terms of taxes, we're going to go deeper on this, but an LLC is a pass-through entity, meaning The revenue that comes through flows through, and then you then pay taxes on your personal income tax in the US. Now, there's different types of forms that are required for each entity. The overall point here, though, is that you will have to pay taxes, right? There's no way around taxes. I don't condone skipping taxes too. If there's loopholes and deductions, take advantage of them, and we'll run through deductions. But whether you're an LLC or a C Corp, there's going to be a certain tax filing that's required. Now, I actually think it's important to know what's being filed, but as we'll go forward, you necessarily don't need to do the filing yourself. I think the key as you scale a business is finding people or companies that you can trust to delegate and take those things off your plate so you can focus on your zone of genius. If your zone of genius is tax or bookkeeping though, 100% keep the thing and do it. But if it's not, find partners who can help you with the sales tax, with the bookkeeping, or the tax. Now, a C corporation, one of the main differences is there's this thing called a corporate tax. So with a C corporation, there's a corporate tax that's paid. Then profits that you earn or flow through to you, you would then pay personal tax on them as well. And again, all of this information we'll be able to share via video after so you can fully go through. What's the best state to incorporate in? Very quick primer here to be thorough. If you live in the US, the best state is typically the state that you live in. Because if you form outside of the state you live in, you technically have to do this thing called a foreign qualification, which registers you to do business in multiple states, which means you're paying fees in multiple states, a registered agent, an annual filing as well. So you accidentally just double the fees you need to pay, which is why, let's say you live in New York, typically would recommend form in New York, and as you expand and hire people or set up offices in other states, that is when you can form or foreign qualify there. If you live outside the US, to be completely thorough, you can choose any state. The world's your oyster. The most popular state is actually Wyoming. That's what we see. Don't sleep on Wyoming. People call it the Swiss Alps of the Rockies. And first LLC was actually created there since the 1960s. Very privacy friendly as well, very forward looking. They're crypto friendly too. And very cheap, cheaper than Delaware, $62 annual fee versus $300. Lastly, processes. Typically, the state takes about 1 to 5 business days to form an LLC. Your EIN, which is your employer identification number, can take 1 day if you're a US citizen. And this is wild. We're close to having flying cars, but believe it or not, if you do not have a US social, you have to fax a form to the IRS still. So it can take a little longer, up to 4 to 8 weeks if you're a non-US founder. The bank account typically takes 1 week. It could take a little longer if they have more information, or they need more information. That's business structure. That's a fast primer there. Again, if people have questions, we're happy to answer after. Now that we have the business set, let's move into some of the fun stuff. I want to go through actual tax-saving strategies or optimizations that can save you up to $30,000 or more. Now, I want to be very candid with everyone. You're not going to make $30,000 today. Just to be real, I hope no one leaves because of that. The point here, though, is there's actual strategies you can take to save money. So let's go through the tax-saving secret number 1, which is the S-Corp election. And I could not find an explanation for S-Corps that actually made sense to me. So here goes. I made this from scratch, and I think this actually explains what an S-Corp election is. One of my favorite subreddits is the Explain Like I'm 5, so not that anyone is 5 years old here. If you are, I will invest in your business if there's a 5-year-old listening or watching, but let's dive in. So you can't form an S-Corp. Remember, you form an LLC or a C Corp, and you do the S-Corp election. So step 1 is just getting that nuance out of the way. Step 2, you have to be a US resident or citizen to do an S-Corp election, and it's limited to 100 shareholders or less. So another piece of foundational nuance. Now, one thing we have to cover quickly to understand the S-Corp tax saving is that in the US, you pay income tax, and it's a progressive tax system, meaning as you make more, that progressive tax rate increases. So in example, if you live in New York, for example, let's say you're making, in this case, mid 100Ks in terms of your income. So overall, I'm going to assume that there's a 22% effective tax rate for this example. If you made 200K or even more, that progressive income tax goes up, but I'm picking 22% for this example. Now, here is the magic. Ready? This is how you can save with an S-Corp. Step 1, let's say you have a business that does $75,000 in profit. So we have a sole prop or a single member LLC, and then we have a company with the S-Corp election. If you have an S-Corp, you are able to actually create this employer-employee relationship, which allows you to split between a salary, a reasonable salary, and distributions. If you do not have an S-Corp, all of that is just treated as profit that passes through. So typically, you can see the split here. It's about 60-40, meaning 60% goes towards salary and 40% towards distributions. Now, this split is important because there's this thing in the US called the self-employment tax rate. And if you do not have an S-Corp, that full 15.3% is taxed on your entire profit or net income. But if you have an S-Corp, and this is the magic here, that's only taxed on the salary portion. So, I'm sure already some of you are seeing this, that means your self-employment tax is significantly lower with the S-Corp. Now, a lot of people just stop here to really be thorough. You then are able to take that as a tax deduction, which means that on your adjusted net income, which is the $75K minus the tax deduction, that is where your tax rate is applied. So you're then paying personal taxes there, you have a total tax liability, and you finish off with the S-Corp election saving over $4,000. So the sauce here, or the magic, is right here. By creating this employer-employee split with the S-Corp election, your self-employment tax rate is only applied to the salary component, which is typically 60%. So right away, you're actually able to save meaningful dollars. Who doesn't want to keep their hard-earned profits? Now I can see the wheel spinning in a couple of people's heads. What if I made $1 million instead of $75,000? That's right, the savings can be even more. Yes, your adjusted progressive net income rate goes up because you're paying more in taxes, but in the same example, because your salary is the only portion taxed with the self-employment income rate versus the full portion, the amount of tax savings really adds up. So typically, we would recommend the S-Corp election when you're starting to get to about $75,000 in profit. And the reason why, just to be completely thorough, is you'll then have to do things like better bookkeeping, S-Corp tax filings, payroll. There's certain things that have additional costs of your time and energy. So typically it starts to make sense as you approach $75,000 in net profit. So that is tax saving secret number one, the S-Corp election. Now, the next thing I want to do is, there was a time when I realized I just don't know these tax advantages or hacks. And I would see people posting them on Twitter, and I thought, how does the whole world know about these deductions and I don't know anything about them? So I got kind of frustrated, and I decided I'm just going to go down a rabbit hole, learn all these deductions, and I want to share them. So deduction number one is the home office deduction. You actually can, if you have an office in your home, and there's two methods here. There's a simplified method, then the actual expense method. You can deduct a portion of your home as an expense or a deduction for working from home. Now here's the best part. You actually don't even need a home office. You just need a home, right? Your dining table or whatever, it could be the office, and that portion can be a deduction. So that's one thing. If you're not taking advantage of this one, that's a deduction that's hidden in plain sight or sitting in plain sight while you work. Home office deduction. And I put $6,000 here as an example, assuming that it's $500 per month on rent times 12 months. Next up, tax saving secret number three is education and training expenses. So did you know, I did not know this, that courses, training materials, things that you're doing to level up your business skills can actually be a deduction. So in this example here, let's say you go to a conference 1 or twice per year, you take some online courses, $5,000 spent, that could be a deduction off your taxes as well. Education and training, leveling up your business, deduction as well, that sounds like a win-win. Next up, this one I had no clue about when we started, so we actually now put this on our website loud and clear for people who use Doola. You can actually deduct up to $5,000 in startup costs and organizational costs in your first year of operation starting a business. So for anyone new starting a business, this is something which is low-hanging fruit, something to take advantage of. Knowledge is power here. That's secret number four, this deduction for starting up a business or those original operational costs. Number five is technology and software deduction. So the technology or software you use to run and scale your business can be a deduction as well. So a laptop, if you create content to acquire customers for your business, the camera or the mic could also be a deduction. And we'll get into actually what ordinary versus non-ordinary deductions are, because not everything can be a deduction. I can see the wheel spinning in some people's heads, but a lot of things can. Software and technology is one example. So let's say you have a new laptop, you have software subscriptions for your business. Let's say that's $4,000. Boom, more deductions, more savings. So if we were to bring it together with these examples specifically, and I know that some of these examples were referenceable, your home office might be smaller or bigger, that is $30,000 in potential deductions, which you could use to reduce your total taxable bill. The truth is, I didn't even go through all of the possible deductions. If you commute to work, you can actually deduct vehicle mileage. There's meals that can be deducted, certain percentage up to 50%, travel, health insurance, retirement contributions. You can even hire your own kids, and that also helps with your tax deductions. So we could probably spend 24 hours here going through tax deductions. Or again, please schedule a consultation. We're happy to run through this too. But the point is, there's so much money on the table. And look, I do not advise or say anyone should avoid paying taxes. But if there are deductions, which some people might call loopholes, I think they're just deductions, every business owner should take advantage of them while they're there. So that's really the reason why we put this knowledge out, is we want you to keep your hard-earned profits. So what's the key? Step 1 is actually knowing. Step 2, and I think this is actually why with some reflection, I had no clue about what things might be deductible, is bookkeeping. Now, I'll be real with you guys. A couple of years into even starting Doola, I didn't really get the point of bookkeeping or accounting. I thought it was just this bill you pay and then they send you the spreadsheet. I'm being completely real. Some people might not like to hear that. But the truth is, what bookkeeping does is it allows you to actually understand what you're spending money on by category. And the category is key because you can then tie that to those deduction categories, which means if you work with the proper CPA or financial preparer, they can say, hey, wait a second, you're spending this much on software. Or wait a second, I see this rent payment here, do you work from home? So the categorization is step 1. Now, please, 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 at least start a spreadsheet. Please, at least do a spreadsheet. But in this day and age, there's software that's free. Doola has software. Even if you don't use Doola, though, seriously, you can find some other software. At a minimum, please walk away, just set up a spreadsheet, or at least have your bank account and all transactions flowing through so you can document your transactions. Now, in terms of the final tip here I want to run through, which is how to stay compliant, and then we're going to switch into tax filing deadlines, there's a couple levels or tiers to compliance. The first one is a new requirement, which there's been some Supreme Court cases which have said it's live and it's not live, but it's this thing called the Beneficial Ownership Interest Reporting Filing, which goes to FinCEN, or the Financial Crimes Network. This is effectively trying to tie a business owner to your company. So if you have filed this before, you're probably covered. If you're a new company forming, this is something you'll have to file. That's one thing you want to keep in mind. The next thing is compliance at a state level. So there's state annual filings that might be done. That does differ by state, but ensure you're staying compliant with the state. If we go up one more level, there's federal/corporate/IRS tax compliance. Now, this is where also, it doesn't explicitly say it on this slide, but we're going to talk about sales tax compliance too, which is typically by state, depending on where you have economic or physical nexus, and we'll get into that. But ensure that you're covered at the business or corporate or federal level. And then lastly, part of compliance, this is really what bookkeeping is doing, is it's preparing your books so that come tax season, a CPA can easily do the filing. So technically, you don't have to do bookkeeping throughout the year, but then when tax season comes, your CPA will have to do catch-up bookkeeping to clean up. And typically they charge a fee for that, unless they really like you and do it for free. But typically they're going to charge a fee. So one example to me, an ounce of preparation is worth a pound at the cure. Having some bookkeeping in place just simplifies things down the line, and it gives you a pulse of your business, knowing your inflows, your outflows, how profitable you are, what you're saving on, what channels you can double down on as well. Final thing, and I want to put these reminders up again, pay your taxes. I don't avoid not paying taxes, but if there's deductions, you should 100% take advantage of them. Use software. It exists. It can make your job easier. Focus your manual work on tinkering with your product or calling and talking to users. Use software to automate away things which you don't want to spend time on. And then, as much as possible, and if you haven't done this today, I would just say, please actually go home and do this. Separate personal and business. From a liability perspective, that's always a good thing, but also it makes things so much cleaner. All of your business transactions flowing through your business bank account, and then all of your personal transactions flowing through personal. Makes it so much cleaner. Please, separate personal and business. The best way to do that is from day 0, but if not, do it later. Finally, if your business is growing or even not growing, you should talk to a professional. A certified professional accountant can help. This is why we have them on our team. Even if you don't talk to a CPA or a Doola's team, find a professional that you can chat with. They are experts in this space, and this is going to sound like a silly learning, but I thought I had to learn everything at first when starting a business. You don't have to. You really don't have to. You just have to know your customer well and then find people who can help you in other areas. So talk to a tax professional if you haven't already. Lastly, tax deadlines. So we are in the midst of tax season right now, and these deadlines each year are typically on these dates. Sometimes it flexes between the 15th and the 17th, but I want to cover the actual deadlines for this tax season. So starting on the left, we have multiple member LLCs and S corporations. The deadline was actually 2 days ago. Now, don't stress. If you actually haven't done this filing yet, it's possible to file an extension. So I just want to state that we're happy to help with that as well, or point you towards a solution that can help. And again, this is for multiple member LLCs and S corporations. Coming up in April, on April 15th, is the deadline for single member LLCs and C corporations. So if you're a US resident with a single member LLC, that is your deadline. If you're a non-US resident as well, if anyone here is a non-US resident, this is when you'll actually have to file what's called Form 5472 with a 1120 filing. So to be thorough, those are the names of the filings. That date is the 15th. So typically every year, those are the 2 dates you should keep in mind, the March or April date, depending on your filings. Last but not least, if anyone is in that bucket of the March 17th filing, you can, if needed, talk to someone, but there's solutions which you can do, like TurboTax or H&R Block, to file very quickly. Again, if you have any questions or you're stressed or maybe thinking, hey, I'm not sure if I did the filing correctly, we'll have this QR code up where you can schedule a call with our team. We want to help educate you, fix things or try to fix things if we can now, but most importantly, prepare for next year. That's the ultimate goal. Okay, that was a crash course. Really, I tried to keep it as dense and value-packed as possible. Now, I'm very excited to switch into Q&A. Now, what we did is we had some incredible questions that came in before that covered the gamut in terms of business taxes and sales tax. So I want to cover here again, disclaimer, not official tax advice, but we talked with the CPA to cover this information. And I'm very excited now to pass the mic over to a Shopify expert who's going to help run through everything on the sales tax side. So please don't hold back here. If you guys have questions on sales tax, you can ask, but I'll cue things over. We have a couple of questions here. Thank you so much.
All right, awesome. Can everyone hear me okay? Okay, great. So thank you for submitting these questions in advance. So sales tax compliance works a little bit differently to business taxes. And, we'll start with the first question here as we kind of go through that entire sales tax life cycle. So essentially, I think the first question is, how do I collect tax for all states? So especially when you're a new business or a growing business, the first thing to know is you don't immediately need to start collecting sales tax in every state in America. The first step is to always determine where you actually have a sales tax obligation, which is commonly going to be referred to as nexus. So nexus can be determined by having a physical presence, such as a store, a warehouse, or even inventory, and even personnel in a state, or it could be an economic threshold. So you might sell over a specific amount within a given state. And I think the important thing to kind of acknowledge here is every state is going to have their own rules and regulations as to what exactly triggers nexus. A lot of states will go by the 100K threshold, some will go by 200, some will go by like 200 orders. So this is a really important thing to research thoroughly, especially if you're starting to grow your business across the country. So once you've determined whether or not you have a sales tax obligation or nexus, the next step is going to be to register with the relevant state sales tax authority. And then once you've registered, then you can start collecting sales tax and then filing and remitting as well. So, how do I know exactly how much tax to collect in each state? So while the US is the land of possibilities, sales tax compliance is inherently very complex for, especially when it comes to sales tax collection. Every state is going to have different rules as to which goods and services are taxable, and then also what rates to apply. On top of that, what makes it more complex is there's also local jurisdictions like certain cities and counties. I think we see this in New York City. We see this in Colorado as well. They're going to also apply their own sales taxes on top of that. Another important thing to keep in mind is that typically in most scenarios, not all, it is going to be based on the destination. So exactly where is your order going, or where is your customer based? In the US, sales tax jurisdictions and kind of the rates that are then applied aren't always as simple as like, what city or what zip code they're based in. Sometimes within the same zip code, there could be 2 different tax rates that need to be applied. So you might see this term often, which is called rooftop accuracy. If you see rooftop accuracy, when people talk about tax calculations and collection, it essentially means being able to apply the correct tax rate based on the buyer's full address, not just their zip code or the city or state that they're based in. So once you do start collecting, and I know this sounds really overwhelming in terms of like, oh my God, what exactly am I meant to tax on every product to every customer? There are some automated tax tools, which I'll talk about, and some tips and tricks to help you really save time and maximize efficiency, as I know you don't want to spend all day researching tax rates. So finally, once you do start collecting tax, this is a really good question in terms of what is the difference between corporate and sales tax, and how do I stay on top of my filings? So corporate taxes, as we've kind of covered so far, are levied on your either business income or your business profits. Sales tax is a little bit different. So you collect sales tax from the customer, and you essentially act as the middleman between the customer and the government that you eventually have to file and remit those taxes to. While it's not actually taken out of your business profits, it is your responsibility to manage that carefully. If you're on Shopify and you have a Shopify balance account, there is a set sales tax feature like automatically that helps you make sure that you're keeping the funds safe and ready to go when it does come time to file and remit. So when it comes to filing and actually remitting sales tax, once again, there's a common theme. Every state is going to have slightly different rules and criteria as to how often and when you need to remit taxes by. Typically, when you're just starting out, some, kind of the rule of thumb, but once again, also not always accurate, is that you'll start kind of on an annual returns basis. And the states, when you do register, will give you this guidance. They will tell you exactly when you need to file, what form you need to use, and things like that. I think something to keep in mind is that some states, surprisingly, will operate via paper mail. So they might not actually email you with this guidance. They will send you a letter, and then 5 months down the line, they might be like, why aren't you filing, monthly? And it's because it's like you totally missed that piece of paper. So just keep that in mind. So essentially, if you're filing annually, monthly, quarterly, or biannually, even, these are going to have slightly different deadlines by state. Most states will, typically go for the 20th of a month, and then some states will go for the 21st or even the 31st of the month. So it's really important to research this carefully, work with a licensed professional to make sure that they're, you're leveraging the most up-to-date information as well. So I know this sounded extremely overwhelming, but I think the important thing to keep in mind is there are a lot of tools and some really great services that you can use out there to really simplify this so you can really stay on top of compliance with relatively minimal effort. Shopify Tax offers a couple of different options for merchants as well. So it can kind of, give you real-time liability insights, like a state-by-state overview, so you understand where exactly you may need to collect, and also where you're approaching and need to start thinking about registering. It offers rooftop accurate calculations and checkout, so it's going to be able to make sure that you're collecting the right amount depending on the customer's full address, while also keeping in mind, obviously, any product exemptions that could differ state by state and tax holidays that do occur from time to time. And then finally, when it comes to filing and remittance, how do I stay on time? This is where, working with a licensed professional or leveraging, an automation tool like Shopify Tax, which can help automate this for you and make sure that they're automatically filed and remitted on time, depending on each state's different deadline and the frequency that you need to file, can really help streamline a lot of this. So hopefully this wasn't too overwhelming, and I do want you to know that there are a lot of options out there depending on the size and the complexity of your business. But yeah, that's a quick recap on sales tax.
Amazing. Yeah, let's actually do a round of applause for Julia. That was an action-packed, value-packed crash course. And sorry to put this on Julia, but we will have Business in a Box networking after. You can ask more sales tax questions. I actually might ask them as well. Let's wrap up before we hit to networking. We had a couple more questions that came in during pre-Q&A, and for these questions, actually had a chance to work directly with a CPA on our team to get answers. So we'll run through a couple of these and then we'll head into business in a box plus a surprise. First question that came in, how do I deduct business expenses effectively and accurately? The first thing to keep in mind here, because we talked a lot about these deductions and expenses, is expenses must be ordinary and necessary. That's a term that you might have heard. Now, the definition of ordinary and necessary is common in your industry and necessary being helpful for your business. So I was trying to think of a trickier example here to explain where might you be pushing the line of ordinary and necessary. Here's what I came up with. Let's say you actually commute to work or you drive to work, or you want to start commuting or drive to work. And even watching Fast and Furious, they have some nice cars there, and you see a Lamborghini. And you say, okay, I like Lamborghinis. I guess I could technically drive to work in a Lamborghini. So you spend a ton of money on a Lamborghini. Yeah, technically you're using that to drive or commute to work, but is it necessary or ordinary in your industry to use a Lamborghini to drive to work versus a different type of car? So that's one example of the necessary and ordinary criteria. If it's too lavish or not ordinary, it's where you could call into problems there. So again, there's lots of content or guides that walks through these distinctions. Talking to a CPA is also a very helpful thing. Another tip here is you should keep records and receipts as long as possible. There's a slim chance the IRS might do an audit. This is where, again, like Julia was saying, the more automation you can use, it's done for you. There's a digital record. It saves up time for you versus having paper receipts. So separate personal and banking. Use personal, professional, separate those. Use automation. And talk to a professional if you're not entirely sure about what is a necessary and ordinary deduction so you can do it accurately. Next question, what if I didn't have any income in the 2024 tax year or in any tax year? We talked about that self-employment tax rate when we were doing the S-Corp LLC example or S-Corp sole prop example. So even if you didn't have income, you still might have to pay for that self-employment income tax rate. The other thing too is there are potential ways that actually filing can help you establish losses in future years, which will actually reduce taxes too. So this is also a topic which can be a bit more complex. Long story short, though, is simply if you did not have any income, you still might have to file. This is where talking to, again, a CPA can really help. Great question. Next question, what type of professional should I be hiring for tax prep versus financial business planning? And this is where it can be confusing because there's terms like bookkeeping and accounting and financial forecasting and tax prep and strategic finance and financial planning. There's lots of different terms. Ultimately, at the end of the day, two types of people you should think about are CPAs, which are certified professional accountants, and then there's this thing called an enrolled agent who's an expert in tax law or in filing returns. Now, if you are double-clicking into a specific area, let's say within sales tax, you're selling across 3 continents in 4 states with a unique type of product, you should probably talk to a localized specialist for that. But commonly speaking, and this is what we try to do at Doola, is to bring together CPAs and bookkeepers so in one place you can have your solo point of contact. And then obviously if you need specialized help in certain areas, you can talk to professionals there. So I would say in terms of your repertoire or network, having a CPA you can go to is fantastic. And if that CPA or that team can also do bookkeeping, easier for you, you have one point of contact, then you can go to localized companies or localized people for specific questions, whether it's a triple click on sales tax or international or global compliance. Question here, what should I be aware of for my first time doing taxes as an e-com seller? Julia gave a great overview again of using automation, walking through economic versus physical nexus, how there's different thresholds in different states. Again, tools like Shopify Tax can make it so easy to ensure that you're aware of hitting these thresholds and then also remitting and filing these too. So ultimately, I'd say really use automation. Report everything that's coming in from platforms if anyone here is a cross-platform seller. There are certain platforms like an Amazon that actually might do parts of this for you due to the waiver ruling, so they actually might collect and remit on your behalf, but you can check that on a marketplace type platform. And again, a really big call out here is unfortunately sales tax does differ state by state. So you want to stay aware of those, use tools when you can to help you automate those and be aware. And then you want to keep aware of these deductions, which we ran through as well, which again comes from knowing what you're spending money on and what the categories are. If I live in one state and open an entity in another, how do I know what deductions apply? The overall answer here is it can get confusing because certain states have different rules. So we talked about the example of doing a foreign qualification in different states, and there are federal rules which apply to all businesses like entity types, and then there are state-by-state rules for which deductions might apply or what filings you might have to do too. So in this example or in this question here, certain things like sales or property or payroll, you might need to allocate them by state. Right? How many sales did you do in one state? Did you hit the threshold? Are you hiring certain people in a certain state? What filings or payments are due there? And it's done on a state-by-state basis. This is yet another example of when you are running payroll, for example, in multiple states, using a dedicated payroll software can help because they're going to automate and help you understand you hired someone here, you made this much money, here's how much you need to pay for taxes in that state. More questions came in, but we want to get to the business networking in a box bingo. So if anyone has any more questions, you can schedule a call with the team. You can get CPA actual tax advice from our team too. So please schedule that email. We'll schedule a call here. We'll send out more information to you after, but you can see some more of the questions that came in, and even tomorrow you might have additional questions. We really want to ensure that you walk away with your questions answered. I'm really excited to get to meet more people. Thank you so much, everyone, for coming tonight, too.